because you think the fundamentals of the business will allow people to make money. Don't worry about the silver thesis, whether the silver's going up or down. You think you kind of cracked the code here. What precisely do you think you're going to be able to produce at the end of this 2-year period, which is going to allow you to walk up to someone and say, I now need $42 million plus whatever G&A you need to buy this mill. So what are you going to have to show them? And can you do that with $4.5 million? Because we've interviewed companies who've spent $40 million, $100 million, and still not been able to answer that question. So what are you going to do that's so special? Hello and welcome to Crux Investor. We spoke earlier today to Michael Konnert, who's the CEO of Vizsla Resources. They're a Mexican silver explorer. We talk about their business plan. They've raised about $9 million to date, and they've got an option on a mill permit and infrastructure in Mexico where they're operating. We talked to him about how he hopes to move from explorer to producer and what it's going to take between now and then. It looks like they need to raise 20 to 25 million bucks to get to that point, and probably another 70 million plus bucks afterwards. We discuss a range of topics. Take a look in the description below, click on the relevant timestamp, that'll take you to that part of the video. In fact, I ask that you click the button in the corner of the screen to subscribe to our YouTube channel. And of course, as usual, if you want to see more videos like this, please click the notification bell. Let's hear what Michael had to say. Hello, Michael. How are you, sir?
Very good, thank you.
Yeah, good. Well, thanks for coming on the show. You're going to tell us today all about Vizsla Resources, silver companies. We're kind of new to silver, but and hopefully you're going to tell us a little bit more about the silver macro story today. But let's start with a 1-minute summary on your business, then we'll get into it.
Excellent. So Vizsla Resources has consolidated the high-grade Panuco district in Mexico, in southern Sinaloa. We consolidated this for the first time ever. It's been a district that's been producing for 450 years, but it's never seen modern exploration. So we are the first company to explore the district as a whole using modern exploration. We have an option agreement with 2 parties in the district that are operating currently in order to purchase all of their production infrastructure, including a mill, permits, AHITO agreements, everything you would need to be a turnkey mid-tier producer in Mexico.
Right, okay. Your take, how long have you been working with silver? Is this your first project in silver? What do you know? What do we need to know?
I've been working in precious metal, for my entire career. So it's been about 10 years in mining, and I view silver as a precious metal with industrial applications as well. So
right.
The company that I had before this that I sold was a cobalt business. I went deep into the EV realm and learned about the implications of electric vehicles, electrification of the world, and that theme. And I think silver actually fits in with that as well, but it also complements the currency argument of silver being tied to gold.
Well, tell me about that. Tell me about that. So EV seems to be, everyone we talk to has got some way of getting some of their commodity into a battery. So talk me through the silver relationship.
Well, it's involved in a lot of the connections and the actual manufacturing of the batteries and the soldering and things like that, of course, and solar panels and every other kind of computing application. I think you can apply silver to. So it's involved. It's certainly not as critical as cobalt or lithium to that equation, but as you see the electrification of the world increase, I think you see silver demand increase on that as well too.
But have you any sort of sense of the numbers involved there? Because I mean, it's not a significant part of as a percentage of electric vehicle batteries, is it? So.
No, I wouldn't. I wouldn't consider it as the right. Same as an input such as cobalt or even copper, of course. But that I think that complements the currency, the debasement of fiat currency argument as well too. Of course, that has always been the main theme behind silver, and as you see gold come up, silver usually follows behind it.
Yeah.
And I think that's really when we look at silver, we're not looking to build a company that needs $100 silver or $50 silver. We're looking to build a company operate in any silver price environment. So the way we do that is through grade.
Okay, so you've got a high grade project, which we are going to talk about in a second, but let's stay with the macro for a little bit longer. So, I need people to understand it, because we're kind of new to it. I think some people are, they're not necessarily avid followers of silver because the volatile nature and the history of that volatility too, it causes a lot of pain. It can make you a lot of money, but it causes a lot of pain. So people tend to stay away. I mean, why are you so excited? Why have you got involved in this silver project?
Well, again, I think when it comes down to this project specifically, it's we look at it as a business. We don't look at it as a commodity play or anything like that. For this is the opportunity to have a true district scale opportunity that compares to some of the greatest mines in districts in Mexico, and contains very high grade and high margin. And so, whether it's silver or gold, or we believe that the precious metals complex is moving higher, of course, but we're not reliant on that to make this business plan.
Okay, so you're saying that investors looking at putting money into your company should not look at the underlying commodity or the macro story. They don't need to, because you think the fundamentals of the business will allow people to make money.
Yeah, we believe so. I mean, of course, if silver crashes to a couple of dollars an ounce, that's not good for any silver, or I'm sure gold producer at that point. But within reason, we think that we're comfortable in most price environments for the precious metals.
Okay, interesting. Now, I just about to, we're talking about retail investors, family offices, high net worths. Trying to understand the business models, and I do want to talk about yours specifically. But you're saying even before you come at this project, don't worry about the silver thesis, whether the silver's going up or down. You think you've kind of cracked the code here? Well,
no, I certainly don't. We're not doing any, haven't cracked any codes. I just think, we're very comfortable with the debasement of the US dollar, the printing of fiat currency as measured against what we believe is real currency, which is gold and silver. That's a thesis that I think most people in mining are fairly comfortable with. Now, you can tie on the electrification and solar panels and these type of applications for silver, which potentially could give it a little bit more torque, of course. But we've been seeing a fairly steady silver price here for the last few years, and it seems to be trending upwards. So we're comfortable with that as far as our company. Okay,
I understand. But silver has had quite a sort of a statement. This volatile is a word which is associated with silver. I don't think you disagree. So it's been trending up, but you're going to tell us in a minute why, with your high grade project, you're going to be impacted less if the market does fall off. Is that what you're about to tell me?
Well, I suppose, yeah, that would be great. Yeah,
that'd be great. But okay, so why don't you get into the project and tell us about this? Because you're consolidating a lot of land packages in Mexico, Sinaloa. I mean, most people worry about the implications of Sinaloa, but what's it actually like doing business in Mexico, first of all, and what's your experience?
That's been fantastic. We're about 45 minutes away from the Mazatlan airport. Mazatlan is a tourist hotspot. We're certainly in this tourist bubble there, which is very unique in Mexico to find a project that has this type of infrastructure, but is also close enough to a major tourist zone so that you don't actually have to worry about some of the common issues that occur in Mexico.
Mm-hmm. Being what? What do you mean? What do you mean by that?
Well, I think once you become a little bit more remote, there's issues. We have a 4-lane toll highway that runs through the property from each end. We have a number of towns that tourists visit in the general area. So there's it's not a remote mountaintop area. It's actually quite nearby an area where I think 300,000 plus Canadians go every winter to vacation, which is Mazatlan. So it's an ideal location.
You consolidated the land package, but what exactly are you buying into?
So what we're doing is we're buying into a production story. Now the production story is a little different than other stories because we we have the opportunity to buy the production now through the option, but no one's ever done any true exploration. No one's put together a proper resource across the district, and no one's actually had the district to explore as a whole. So we're the first company to have that opportunity. So the way that we look at it is actually that we have a 2-year, in terms of the option, a 2-year exploration or due diligence window where we can explore, drill, and do everything we need to do to be comfortable with purchasing the mill, the roads, the power, the permits, the HEDO agreements, everything from these producing entities in Mexico.
Okay, let's break that down. Okay, so you've done this consolidation. You've got an option of buying a mill with permits and all of the infrastructure that's associated with it. Once you've been through a period of exploration that satisfies you and your investors. So let's talk about the exploration bit first of all. So how much money have you raised? When was this? And what are you going to do with it?
So we've completed a total of $6 million, $6 million in the last financing. In June of last year, we did $2 million as well. But so we have about $4.5 million now that we are putting into the ground over the next 12 months.
Right.
Towards the end of the year. So we're completing a 14,500 meter drill program. And we're also sampling across the district and understanding some of the old workings. So it's interesting, the fact that this producing for so long, gives us a lot of infrastructure to actually explore from. So there's 35 kilometers of underground workings. So we have our team going and sampling underground workings, but we also have our team drilling from surface as well too.
Okay, so you need to help me here. So you've raised $8 million in total over the entire company's life.
We had an $800,000 IPO as a
$7 million, right? $7 million. With you at $4.5 million left, what have you spent? What have you spent the other 2.5 on so far? Just getting the thing.
The initial $2 million was raised essentially, to recapitalize the company before we had this project in it. So it gave us the breathing room, the ability to go and acquire a project. We were looking at a number of serious assets, and this was the one that we actually completed on. And that money came a lot, from myself, from our chairman and our board of directors. So that was, kind of our 100% risk capital. And then subsequent to us completing the acquisition of these options and bringing this into the company, we raised a $6 million brokered financing and a non-brokered component of that without a warrant. And so the proceeds of that were basically all to go into the ground here to explore.
Okay, so you got to help me out here. I really need to understand this. You've got $4.5 million which is going in the ground. What precisely do you think you're going to be able to produce at the end of this 2-year period, which is going to allow you to walk up to someone and say, I now need $42 million plus whatever G&A you need to buy this mill. So what are you going to have to show them? And can you do that with $4.5 million? Because we've interviewed companies who've spent $40 million, $100 million, and still not been able to answer that question. So what are you going to do that's so special?
So we have a 2-part plan. It'll be about $4 million that we put into discovery drilling and sampling. And so we put out a release this morning that's an example of us finding a new to us vein in the area with kilo plus material. But what we're doing and what the largest expense is going to be for this year is actually discovery drilling. So we're going on old ore shoots. We're going on areas that we've sampled and mapped before. We have more than 20 targets right now that we're going and using the drill to discover whether or not we want to follow up on those targets with resource definition drill. So the first phase is discovery drilling, so discovery by drill bit. Following that, we rank and prioritize those opportunities that we found, and then we bring another drill in to resource drill on that. So at the end of the 2 years, we would like to have enough ore in a resource that we can go and go to the market and say, this is what we have proven here. We have a mill right beside us. We'd like to use either debt or some sort of financing or equity if it's non-dilutive to acquire the back end of that option. run that resource through the mill, and create a quick payback. So that's kind of our business plan.
No, I get the theory of it, but what are the numbers? What does that number need to look like in 2 years' time? You're going to walk up to someone. It's a lot of money. You best part of $50 million in 2 years' time. What number are they going to need to hear? I know you can't tell me precisely what you're going to get, but what do you think the minimum number is for them to pay attention to you?
So the way that we've modeled it, I think we have to understand too that this is not just path forward to a small resource. This is a way to justify the purchase of an entire district. And the district is very large, and I will get to what numbers we need. But I would say that if we can prove that this is a district scale opportunity, there's going to be a lot of interest in this, buying it out and seeing more exploration. But in order to execute on the option, I think that we probably need somewhere in the range of 30 to 50 million ounces of silver. And that would allow a company or a streaming company or whoever, the investor to model back the first few years of production and against that mill, right? So the mill is operating, the mill has permits and everything. So that would be the way to model that payback period.
Right.
I think there needs to be a baseline of what's somewhere around that in terms of silver ounces.
Okay, so you mentioned the phrase earlier. It's a high grade. The area is full of high grade ore, which is great. You're hoping that the price of silver doesn't come back down or isn't lower than it is today in 2 years' time, sure. Right? But if it is, I mean, you're going to have to be constantly assessing this. What if you get to the point where you've kind of worked up a resource, it's lower than what you hoped, and you're not able to complete this still? Do you still kind of stay in, but you don't buy the mill? Is that an option?
The way that we've structured it is there is two different options. One has the majority of the exploration ground. The other has exploration ground and a mill, which is about 50-50 in terms of the value of the option. So yes, there is optionality. There are different moves that we can make if we need to, and constantly reassessing this. But all of the evidence that we've seen so far leads us to believe that we will have some success with the high grade. And however, we have no obligation to complete the option. If we find out that that's not the case, then we've only risked a small amount of capital for the upside of having a producing region.
Right. Okay. So how do you shortcut this process? I mean, 2 years isn't too far out, but you've got. I assume this mill is mothballed or in care and maintenance. I mean, what's the state of play there?
Yeah, it was producing late last year.
Late last year. Okay. Okay. So probably don't need to spend too much money on that, other than ongoing maintenance. How do you shortcut the process into getting into production there, given it was operating as recently as last year?
Well, that's a good question. So, there always, if there is a market where equity financing turns on in a significant way, of course, maybe that amount of ore that you need to put into a resource could go down. But for us, I think we want to be comfortable with what we're buying as well too. So shortcutting the process means increasing the amount of drills on the ground.
Right. Okay. So between now and then, have you done your full diligence on this mill, or will you? Is that part of the process over the next 2 years in trying to understand what you're buying, what you're going to need to spend on it? Are you going to need to raise some more money?
Certainly. So we're very lucky. On our board is Simon Smirlik, who's the Chief Operating Officer of Ausenco Engineering, one of the world's best mine builders. She's a mentor of mine as well too. So we're very lucky to have his insight in terms of infrastructures and mill and what would be required. There would be more money needed to be spent on it, of course, to bring it up to a standard that could operate at every day operating at its highest capacity. We'd want to make sure that would be running smoothly. But it's not a huge amount. Maybe it's somewhere between $5 and $10 million on top of that total purchase price to bring it up to a certain standard that you'd be comfortable at.
Okay.
Yeah.
And are you raising any money between now and then?
Yeah, I think so. So our first phase of exploration, which is the discovery drilling that I mentioned, where we're going to these 20 different targets and drilling on those targets to discover if there's high-grade pods there, high-grade ore shoots. That'll be completed with the budget, with the cash that we have on hand. Mm-hmm. In order to complete the resource drilling, which will be the second phase, we will need to raise more money.
How much?
But we're fully funded for this drill program.
How much will you have to raise going forward for phase 2?
I would budget something in order to really, get the resource drilling done properly. I would say it's probably somewhere between 20 and 25 million dollars.
Oh wow. Okay. What's your market cap today? 36.
It's in the mid 40s.
Sorry, it's what?
Mid 40s.
Mid 40s. Oh, okay. So you're going to raise another 20 to 25 for the 2-year period out, but that will get you all the information you need to work out how you best go forward and how you position it to the market to raise, from what I've just heard, say 42 million bucks plus another 5 to 10 million bucks just on the mill plus G&A. So are we somewhere up around, if you do decide to go ahead with the mill, you're talking about 65, 70 million raise at that point as well?
Yeah, exactly.
Right.
And what that does is the way that, you can look at that is, you look at a company like Silvercrest that's building Las Chispas, and they have a capex of 100 million plus 30 million sustaining capital on the PEA phase alone. Now, we can actually basically buy that, not that the mill that they're building may be better, it's going to be brand new, but we can essentially enter into the same category of a producing company in Mexico for 50 cents on the dollar if you add in that capex on top of the mill and the total purchase price. But that's also buying all the concessions, the highway, not the highway, but the roads that run through the property, the power, the permits. It's a true shortcut to production.
Okay, so that's a true shortcut product. We know the Silvercrest guys. We interviewed them. Good guys. We like them. So what do you know about your project today in terms of? I get that it's high grade, but are you going to be able to mine this thing, or have people been able to mine this thing economically? What sort of numbers are we talking about? Therefore, what margins are we talking about?
Well, I think the question whether or not we'll be able to mine it somewhat answered by the fact that there's been this multiple centuries of production there. There's currently Mexican miners operating there that have zero mine plan, zero geological maps, zero drilling or any kind of plan work. They just see a vein, they drift on it, they find ore, they don't find ore, and they're operating. They're profitable. They've been in business, so that leaves a lot of room for margin there, margin of error, I would say. But of course, I can't tell you what grades they're producing at. But I think we'd be very happy if we were pulling somewhere between kind of a 500 gram per ton silver and a kilo silver on some of these ore shoots. And the higher that you get to the kilo numbers or above that, if you can get into some of these high grade ore shoots that we've seen evidence of, and we've seen on the property, and of course we've seen these massive mined out voids underground, that would allow you to have that near term payback after you execute the option.
But that's a different sort of mining, and it's small scale, and they're chasing veins. Can you give me a sense of what you guys think you're going to be getting into in terms of are you chasing veins, or is it open pit, or have you got a sense of that yet? Do you know what you're getting into, and therefore what are the costs involved?
Well, what we'd be doing very, very likely would be continuing underground, and the scale is actually a bit deceiving. So although they are they're not as well planned as a Canadian company, some of the scale of the mining, the workings are quite impressive, and we'll start to show that through our content to show the underground information there. But we would be operating an underground mine 99% likely, and right. The cost I think would be in line with some of the other silver mines in Mexico, call it $8 or $9 an ounce, something like that. San Dimas up the road is around that range, 80 kilometers away. So that's what we see in Mexico. So that's about I think the average is somewhere around the $8 or $9 an ounce. But there's potential to lower that through utilizing the existing infrastructure and not having to spend so much on capital expenditure.
Okay, and so what are the other things that you're actually producing during this 2-year exploration phase, and what sort of studies are you producing? What sort of, how do you give a bit more certainty and guidance to the market as to what it is you're going to have before you make this acquisition?
So of course, we'll always be modeling things internally.
Sure.
The market will certainly be seeing a resource in the next 2 years. Any studies exceeding that, I'm not so sure yet, because we need to just find what we have.
Okay, so you're not getting into the nitty gritty of the engineering, ore sorting, and any of that.
Of course, we could with the help of Ausenco and that with our board member Simon. We have all that. I would think pretty well under control, but we'll certainly be receptive to what the market needs in order to execute that option.
Okay, cool. And give me again a picture of what are you doing? You're going to get into production. So this is. Do people ever exit silver companies, or do they just produce it for cash? Because again, I'm thinking the volatile nature of this. Do people step in and do buyouts, or do you just say no? We'll just keep producing cash through thick and thin.
Well, certainly you look at a company like MIG Silver that I've seen on the
different model, right?
Right. They've got a very large market cap with a joint venture with a major in Mexico.
But they've got 4 employees. They got 4 employees, right? So their model was farm out to someone next door who's doing exactly the same thing. So really smart. I love those guys. But what are you doing? What are you going to do?
So we would look at certainly building this company in terms of wanting to go into production, wanting to be a very high margin producer in Mexico, and building it the best we can. And if that's an attractive target to a number of the many silver and gold producers in Mexico that operate there, they want to take us over, then that's fine. But we're going to build this towards a production business.
Okay, that's the big idea. Okay, Michael, thanks for your time. Enjoyed hearing the story. Like I said, silver's new to us. We're still learning. We'll come back and talk to you another time and ask you some difficult questions. But thank you very much for going through that. Appreciate it.
Thank you. I appreciate it. Yeah, thank you.